Welcome back to Market on Close. It is time for the closers panel, and it is quite a busy Tuesday. Any day that ends with Y, though, has been a massive day for cannabis companies lately. I want to bring in our guests as we talk about this. I know some of the guys in-house are like, come on, how much can we cover it? But it's astounding. Charles Moon, Senior Market Strategist of Equities at Prosper Trading Academy, is with us. Alex Coffey from the Retail Trading Desk at TD Ameritrade, and Mr. Connor, the host and the Director of Trader Education at TD Ameritrade, and Virtual Trade, of course. All right, your title's getting too long, Scott.
It is. We'll have to
All right,
cover that up.
Charles, is there any end in sight? Is this going to have to be a parabolic move that goes the other way, or are these companies really going to find value in this market in time for these traders that are buying all this stuff to make money?
Yeah, I guess that's the million-dollar question. Right now, I believe we're in this quote-unquote second leg for the cannabis sector rally. Now, let's just take Tilray out of the equation, right? When we look at the overall...
For the moment, we're coming back to
just for now, because I mean, Tilray is on another level. It's,
yeah.
you know, it's Bitcoin. I hate to say it like that. I'm not saying the company is Bitcoin. I'm saying the stock is reacting like it's Bitcoin.
You have to be careful. Sometimes people interpret that as a pejorative.
No, my apologies. But the broad sector has been consolidating. It's been holding. It's been holding steady since Citron foolishly let out a few tweets on Kronos and of course on Tilray, and we've seen what's happened with their calls. It's gone a complete 180 against them. But today what I've noticed was really a lot of stocks making strong moves, breaking out on hourlies, breaking out on 30-minute charts, breaking out on daily charts. And when I'm seeing, you know, my watch list and pretty much 40 names, 39 is in the green today, regardless, because they don't really follow the overall markets, because most of them are OTCs when they're on the US market, with the exception of the big three. It's telling me that buyers are rushing in, and now we're starting to see this breakout, and now we're starting to see technical trading behind this, and technical traders are trying to play that breakout, right? Big yield, short-term period. So I think we're in the second leg. I believe this is going to lead up into October 17th, and that's really the big day. The week of, let's say, or maybe the week after, we saw the big run-up in November, December. We saw the first week of January be pretty responsive, pretty bullish, and then basically the floor gave way and it just completely unraveled.
What's interesting about that, and I won't come back to this, and again, as you know, we often do compared to the Bitcoin blockchain stuff. I mean, there are a few other stories in the market across assets that have been kind of bubbly in 2018. One of the differences here, Scott, is that the blockchain and crypto stuff, we still don't really know. I don't want to use the word floor, but we don't know how much that's got left to go. Sure. We know that, at least if we talk about the companies that were egregious in their shift towards blockchain, you know, the Riot, the Kodak, all that stuff that bubble definitely popped, right?
Absolutely.
What's interesting about the cannabis story, and they never came back.
Right.
What's interesting about the cannabis story is if you had said, oh, well, you know, the bubble popped in December, January, it now is a second peak. So there's something there that suggests, you know, a clear, perhaps, visibility for an actual market. Maybe it's not tomorrow, maybe it's not in time to sustain these prices, but eventually a true market and a use case.
Right, I think you're absolutely right, because what we saw with the original run-up of the Bitcoin stocks is everyone struggled with determining what the true value of Bitcoin was, and we actually market never really determined that. As a matter of fact,
figuring it out.
They're still trying to figure it out. It was sort of an elusive type product. You know, what did it really mean? What were uses? There were countries that could say, no, you can't use this. Now, you know, looking at Tilray, now we actually have a commodity, if you will, that has actual value. People can see it. It's starting to have potential benefits in the medical fields and whatnot. So at least there's something there. The question that still comes to me, and the reason we're seeing Tilray so high, is can they all be winners? Right? Can they all be winners in this space? And that was one of the big things that you mentioned in Bitcoin. They couldn't all be winners. I mean, we only need one or two currencies. And as it turns out, that really kind of has boiled down to Bitcoin. Yeah. But yeah, in this space, how many winners can there be? Because right now, like you said, they're all racing to the sky. As a matter of fact, I was just looking at the implied volatility of the options in Tilray. You know where they are right now? 220 IV. Wow, that is incredible. So in other words, there's a lot of speculation going on.
Break down what that means, Coach.
What that simply means is the expected move based on what people are willing to pay for calls and puts right now is tremendous. I think Tilray's trading around 150. If you look at the 190 calls, that's $40 higher with 2 weeks to go that option's trading for $7.50, right? So again, that's what was reflecting the big movements or expectations of movements in this stock. So as a trader, you've got to be extremely careful because this volatility most likely will continue.
Yeah, and Alex, that means expensive to basically take part in
take
this
any position.
either way.
No, definitely. And if you look at the puts even too, we were talking about this a little bit before, they're priced way over the calls because of how hard it is actually to establish a short position. So that's also adding to that volatility as well.
When we say short, are you actually talking about
betting against the stock. So
okay,
if
in
you were
any
to-
form. So you can buy a put or
Well, yeah,
call.
because it's really hard to borrow shares right now, and the interest is so high.
To short the stock.
To short the stock outright, the only alternative then, how people are looking at it is, I'm going to go buy puts in this stock. That's driving those prices way up.
Yeah. Do you look at that, Charles, on take a company like Tilray, for example, and see opportunity to then, if there's so much demand to get on the bearish side of this thing now that it's rocketed up. I mean, I imagine it's kind of playing with fire when you look at a momentum trade like this. But a perfect example is now they have this announcement that they're got approval to bring in cannabis to, do testing on it. You see San Diego, the short Andrew Left, as you mentioned, who's been on the program, pointed out that he doesn't buy this story for that. But how do you trade this right now? Do you just steer clear of it?
Personally, for me, it has to be very short term, right? And it's upside to me only. And I get the sentiment of wanting to fade this, but when we talk about the momentum name, when people step in front of momentum names, generally speaking, they lose. You're basically saying, I'm picking a top. And I know you guys have a lot of experience in the market. I have over a decade. I have never been able to call a top in my life.
Right. I think anyone who does, you should be suspicious.
Right. I am not
anyone
that
who says
good.
That.
So if you take that mentality that I am going to pick a top, what do you know outside of the rest of the markets besides a feel or a thought or just knowing that it's overvalued? Yeah, everybody in the market understands this is overvalued. This news of them bringing these little capsules over to test, just simple basic testing is driving the stock price up $30, $25, $30 today. It doesn't fit. It doesn't make sense. And in that, like I said, I would look at it more that I'm not looking at Tilray. I'm looking at a trade setup. If the opportunity is there, if the risk parameters fit, perfect. But the liquidity for me is never there. I mean, when I'm looking at the books, it's so thin. We're talking about $2 to maybe $3 wide spreads between bid offer, throughout the day while we're trading millions of shares. I don't know. At this point, you might as well just buy, just like you did with Bitcoin. Close your eyes, wake up the next morning, and hope it's up another 30 points.
Or if you do take a position, make sure it's a defined risk position. So like you just mentioned, no one knows which way the stock is going. I mean, this stock opened in July at 17 and hit 150 today. So obviously, from a charting standpoint, it's on, like you said, it's in a total breakout. But where eventually will that top be? Again, nobody knows for sure, because when emotions drive a stock, not fundamentals, but emotions drive a stock, it's very difficult to predict where that top might be.
Right, and one word he used right at the beginning is parabolic. I mean, this is actually a parabola if you look at how it looks. It's straight up, and it's also, we talked a little bit last week, the fear of missing out aspect. You definitely saw it with Bitcoin, and like you said, you almost could just close your eyes and buy it at this point if it's up $30 every day, but it's a game of hot potato. Eventually, someone's going to be stuck with that when it's down a bunch, if it goes down. And so just to put some numbers to this a little bit, you said it started at 17, that's 800% we're up since July.
Right.
Wow.
We have a $14 billion market cap. That's equivalent with MGM, Wynn Resorts, United Rentals, ConAgra Foods. I mean, those are just numbers.
I love it.
Putting
No, it's a
things in
great
perspective.
comparison. I'm curious if anybody here has thought about the, call it fundamental story, because one of the other, there's the ETF, by the way, and that's a whole other can of worms because the ETF switched around its actual, purpose. The custodian now is changing for that, but there's the fund that has been doing the same. I'm curious if either yesterday's news, or the report, I should call it, report about Coke and Aurora Cannabis, or if today's report that Tilray is, testing these, does any of that create fundamental value? Have you thought about this from from that perspective?
Coke gets involved, it's a game changer. Okay, we're talking about a 1% of the top 100 company getting involved in this sector. And we've already seen the benefit of a company like Constellation Brands getting involved in terms of trying to produce these cannabinoid-based drinks and then having the distribution lines. Well, Sorry to say, Coke probably has a much stronger distribution line. They have the ability to produce at a lower price point and then distribute at a lower price point, so it's greater margin.
Yeah.
And they get involved. That also draws in Pepsi. That also draws in, Dr. Pepper.
They said in their statement, like many other beverage companies.
Right, and it's not surprising. The one sector that I'm surprised that's not getting involved is the tobacco industry. But maybe they're just waiting on the sidelines, seeing how things are going to play out. Because if anyone can cultivate, harvest, create, produce, and then distribute, it's going to be them, and they're going to be able to do it as quick as these beverage, beverage companies. But you bring Coke involved, then Pepsi gets involved, and DPS, Snapple / GMCR, the private company, gets involved, and then that really starts opening up more.
Yeah.
It brings up, potentially Cisco, as we were just talking about Conagra. That potentially brings up Cisco because their distribution lines.
SYSCO, to be clear, not the switch maker.
Right.
And keep in mind, Coca-Cola is just looking at the non-psychoactive portion.
Sure, the CBD
the
only.
CBD, as we talk about. And of course, the other could be a little limitation. But I think there's two things other investors need to keep in mind about this. And one is that this is not the first FDA-approved drug. There was one back in June that I think was with, I wrote down, GW Pharma.
Right.
Now, here's what's interesting about that. Well, they got the approval, and the stock went from 160 down to 130. Now, what does that mean? Does that mean the stock was overpriced to begin with? Now, of course, it's come back a little bit now with the second wave, back up to, I think, close to 150.
Yeah.
But the initial reaction was not necessarily positive, right? Because, again, these companies are so pumped up now on emotion and potential that it's hard to actually get a fundamental idea of what they're valued. Second thing is, and no one's talking about this.
GWPH, Scott, I just want to jump in.
GWPH, I'm sorry, is that the name of it?
We're going to blow through the break here, guys. There's the closing bell at the NASDAQ market site as we see the end of the trading session. We'll go through some of the big moves today on the macro side, but I want to finish this conversation because I think this is really good insight from everyone. GWPH is the ticker for GW Pharmaceuticals. As you point out, Scott, now it's at 150. It's come back, but another name to keep in mind here. The S&P 500 today up about 0.6%, which is just below the NASDAQ, which led the way, 0.8% higher, kind of coming off some of the loftiest parts of the trading session, but nevertheless, stocks and investors just shrugging right off all that tariff talk that went from talk to reality. What tariffs? The 10-year yield also is, watch it because it's moving pretty quickly back to the year-to-date highs, which, remember, are just around 3.1%. Today, even as the dollar started off lower, it flipped and followed the direction of yields. But let's continue this conversation, guys. Scott, I want to let you finish your thought here.
Right. So one thing I don't hear a lot of people talking about these is, again, if we look at marijuana potentially being a commodity, which it will be if it becomes legal on the U.S. level, on a federal level.
Sure.
Now, I was out in California last week, and I know it's already legal there for recreational use, and people have the option.
Well, careful, Scott. Don't pull the Elon.
I'm not going to pull the Elon, but I know that people there have an opportunity to grow their own. Now, here's the thing I wonder, is that no one's talking about this. The reason a lot of these stocks are higher because all of it has to come from Canada right now. It can't be produced in the U.S. Well, what if it does become legal in the U.S.? What does it do to this entire commodity? Again, that could completely change the landscape, right, on the value of all these companies.
All right, now let's have some fun with this to come back. What is a more daring bet? Is it betting on a crypto asset because you're waiting for that Bitcoin ETF to come through? Or is it betting on cannabis because you're waiting for a legal process that joins the other handful of states that have this? Because this is all about figuring out that market, right, and the use case. And I think one could argue that the use case is closer for cannabis, but it's still, at least in the U.S., has a long way to go. Charlie, Alex.
If I can go real quick. So the one thing I will say is I don't deny, I come off a little bit maybe against this sector sometimes when I come on here, but there is a use to this stuff, and there is potential recreational use, and as we've seen how
and
laws
medical as well.
As laws have been going, though, it feels like it's going that way. Whether that's going to be in the next year, 5 years, 10 years, it feels like it's going that direction. It's just we're looking at something that's skyrocketing up, and emotions are getting involved. When you look at something like crypto, that's kind of settled off. You'd have an opportunity to kind of buy in lower now. So
no, I see your point here. It kind of comes back to the discussion we had about the Indian site maybe being closer for one than the other, perhaps. I mean, again, that gets a little bit troublesome. Charles, I'll give you the last thought here because I want to talk about some of the bigger market action today. But is there, parts of this cannabis market that maybe are more safe than others. I look at a company like CGC, for example. It feels like that stock, now with the backing of Constellation Brands, it might be tougher to shake out hands there. Whereas Tilray, if something happens over tomorrow, then wait, why do I own Tilray again? But at least CGC, you can fall back and say, all right, well, I can bet on Constellation's team knowing something.
Yeah, and then when we draw in, say, institutional interests, right? Maybe institutional holdings, hedge fund holdings.
Yes.
I guess in the sense, if we're to weigh crypto versus cannabis in the long term, I could tell you unequivocally, I am leaning 100% towards cannabis.
Okay.
I believe that if it's ever going to be legalized federally, that it'll be one of the highest, most actively traded commodities out there.
Yeah.
It'll be on the same level as, let's say, wheat, frozen orange juice, any of those other commodities that are on the CME right now. In terms of the pharmaceutical side with GWPH, we've already seen the huge euphoric buying. The buying actually took place before that date. It was on the FDA announcement that the advisory board unanimously were going to push it for the final vote. And the day that it fell on the final vote, to me, it was just a risk-off move. We're starting to see the buyers come back in. Overall, in the long term, we're not just talking about cannabis for recreational medical. Let's not forget that hemp can be also an offset on cotton. It could actually increase agriculture in America and really lower down prices for the consumers. So in turn, you're kind of saying make America better again by going pro marijuana. Now the South doesn't really agree with that thought process, but from the actual numbers, from the taxation, it could be a huge, huge boon for our economy.
Yep, absolutely.
All right, Charles, we don't have enough time for the Charles.
We could do an hour on that.
I love it. We're going to talk some more about it. Let's talk about what happened today, and not to discount it. It's a super interesting story, and I'm looking forward to keep chatting it with you, Charlie. Today we saw a market that finally got real big tariff numbers. We're talking hundreds of billions now.
Yeah.
Shrugged it off. So, Scott, some of this was the stuff we've seen before. The momentum trade was big today. But then you've got things like we talked about, the rails leading the market. Netflix is back, but Netflix is deep off its highs. Even Symantec got a little bit of a bid, as did not so much some of the other names in the semi space, but Micron even got a bid up 4%. What do you make of the response?
Right, I think the market, just like you said, is continuing to digest all the different geopolitical news out there. And I think as time goes on, we get a better feel for what the tariffs potentially mean. I saw an interesting article that broke down world trade. And if you look at the world trade, bilateral trade between the US and China, that only compromises about 3% of world trade. Right, so when you put these numbers all together and you look at even if tariffs did kind of go into a trade war, what that would mean for our GDPs, the numbers just aren't that big. 0.3 to 0.5, again, not disastrous numbers for our GDP. So I think the market's digesting that, putting it into what they value in the stocks, and it's kind of interesting. Like you said, we saw VIX come down quite a bit today. It's in the 12s again. So again, fear is coming out of the market, and we saw a reversal of the stocks that have been kind of hurt last week. Kind of led the charge today. We saw NASDAQ come back and lead the way most of the day.
Is the fact that the China ETF gained just the clearest sort of support for the sell the news argument here today, Alex? I mean, look, it's down way off the highs.
I think so, and well, the one thing I'm going to say on this too is all news on this front is better than speculation. So I think people who are out there looking at this stuff day to day, they like to see the facts. Okay, this is actually what those tariffs look like. That's better than guessing. And so I think that we're seeing that today.
The old unknown story there, basically, is that we'd rather know than not know.
I would say so. I think you're seeing that in the VIX. I mean, you see a 5% pullback in the VIX today. You're going back into the 12 handle.
I think it's a fair point. What did you make of this reaction, Charles?
Yeah, it just seems like the market expected this. We've heard it, right? Trump has been tweeting 200 billion, maybe 200 more. We're going to add more. And that's kind of the key factor here, is that they said possibly more to come, right? More to come. So that's really the elephant in the room. The fact that they're putting tariff on Chinese goods is not a surprise. We've been conditioned. So it was risk off. Maybe it was for the fact that it was only at 10%. Maybe it's because it could increase to 25%. They're expecting to increase to 50%, whatever the case may be. But I made a pretty wild call before I got on. My belief is that if this gets negotiated out and it becomes favorable for the U.S. and basically trade war talk is done, I believe the market is going to make an immense jump. and you could kind of expect it to make a till rate type of move. I said 10% in 1 month, and it's outrageous, it's out there, but it's absolutely possible. If Tilray can make that kind of move with the way people are just piling into the market, risk on at these levels without fear, just like you said with the VIX plummeting today, in my opinion,
Right.
I honestly believe that we could see a substantial move. People have been waiting all year for this, right? They're thinking, where's 2017 all over again?
Yeah.
We got 3 more months to
Almost
go.
like it's setting up the bar to be crossed.
I mean,
you know,
it just
analogous
seems
to
like
the
it's a
earnings
true
statement.
setup. It's like you're teeing up and ready to go.
Right, and again, here's what's interesting about that, because we've seen this in the past. When the market tends to move in a narrow range for an extended period of time, it seems like the longer it moves in that narrow range, the bigger the potential breakout
Right.
is when it
Well,
makes
let's be clear, we've been making new highs here.
Yeah, we have, but look at this. We have not had a 1% move in the S&P 500 since June.
Okay.
Now, what does that tell you? That means the volatility has not been here short-term since June. Now, there's many studies, and I know you're big on the technical side, those Bollinger Band breakouts. We know that the longer it goes at a tight range, the bigger we can expect to see those bands explode.
Sure.
So his argument that we're due for a move, you might be absolutely right, because the market's kind of bringing us out. Up or down? Well, again, if,
Yeah, we're gonna have to wait and see,
if
but-
tariffs get taken care of,
Right.
you certainly think
Alex,
it could potentially be.
You
on
want to take the other side of this trade? What if you look at the market plowing to those new highs? I mean, if this were spring, I would say it might be easier to jump onto that narrative, right? Because the market was chopping. We were kind of testing lows in March and April. But isn't today showing us that investors understand the tariff situation?
So how I would look at it is if we look at over the past couple of years, we've had lots of geopolitical news, different events. We've seen the market kind of consolidate a little bit, make new highs slowly. These news things would come out in between sessions. Futures would sell off. We'd rally back. Risk was back on. But then we get a big drop. We saw it August 2015.
Yep.
We saw it earlier this year. And so I think that I would, I mean, if I had to make a call, I don't know, low volatility hanging out.
Yeah. Well, as you point out there, you could see the dips that we had, and a lot of these, by the way, are very China related. So the idea that the markets are hypersensitive to anything that comes out of the region is very true. Today we also, though, Charles, if we track this sort of logic about the market now understanding, let's say we're at peak tariff, right? Peak tariff risk. I guess there's still the 267 billion and any further Chinese response. Sure. That could be the next leg in terms of new information to enter this domain. But other than that, if the entropy now is towards resolution, then you have what? Thinking about EM comeback, thinking about Chinese stock comeback. How do we then take the sort of knock-on effect of this? Because I thought it was very interesting to see some of the EM strength today.
Sure, and I guess if we're going to talk about emerging markets, it has to start with China, right? And all these little
Yes.
small cap Chinese tech names. I mean, in all honesty, I think
Small
that,
cap, I'm thinking big cap.
Okay, let's talk about Baba and Baidu. You know, but really, to me, the momentum in these names are garnered around stocks like WB, like SINA, SINA, and EDU and WUBA, these smaller cap tech names that actually have huge market weight. WB is basically Facebook and Twitter and WhatsApp and Snapchat all combined in China. Their user base is nearly as large as Facebook. And so I've actually been following and tracking the stock when it was like 10, 12 bucks. And then it's basically went from that price to like 70 in like a blink of an eye.
Talking Weibo.
Weibo,
72
yes,
bucks
WB,
now.
sorry.
Yeah.
And so I just feel that once these stocks really start catching a bit, if you've noticed since probably early summer, maybe even late spring, they've been in a pretty significant downtrend. When these stocks start crossing over, when the ATR trailing stop on Thinkorswim flips, which is my volatility stop, it's always going to be holding supreme unless there's an anomaly in price action and trading action. Once that takes place, or until that takes place, I don't want to touch the emerging markets as of yet. Do I find value in them? Yes. It's very hard and very difficult nowadays to find value in anything, and you're going to have to look at emerging markets. That's where a lot of the risk is. To me, I'm centralizing my thoughts in terms of when this market is going to make a move, when we see the fins and large cap tech names all move in sympathy. When we start seeing these stocks, like Prudential, for example. Prudential has been hovering on their 52-week chart in their lower third, and they've been going sideways for 2 months straight. If they can break out, they can start drawing some of these fins up. You know, we've talked about J.P. Morgan being a leader.
Well, today we got a little help, right? 10-year yields
big time.
climbed a bit, back towards the 310 area. To connect a few of these points, because I want to broaden out the macro side of this as well before we close out the discussion, because I think we got to bring up the 10-year again, Scott, to put this together, whether or not it helps financials, or whether or not then that this is happening, maybe no coincidence, after the first real wage growth we see in quite some time. We had inflation come in a little bit below, but the fact that the consumer has more buying power is what ultimately will drive some of those inflation metrics that we've been waiting for. Then you get $200 billion in tariffs, which 9 out of 10 economists, well, I'm pulling that out of nowhere here, that's that, but a lot of economists are going to come on and tell you, look, if there's one thing we know about this, it may not be economic catastrophe. Some economists will say that, some will disagree, but most will say this will lead to higher prices across the board. That also could add on to that inflation front. Should we be now coming back almost 10 months later to the concerns we began the year with, which was inflation?
Well, yes, we're moving to the higher range on the 10-year yield, no question about that. But it's been sort of a gradual, measured move, right? We're not racing. We're just getting back to those levels where many people, like you said, expected it to be much earlier in the year. But I think when you're talking about that big picture, and we're looking at sort of globally what's going on, and when you just mentioned the emerging markets, you know, China down, what, 20 some odd percent. At the same time, we've rallied about 7 or 8%. Now the question is, how long can our two economies go in the opposite direction? The question being, it's based on a lot of this geopolitical and tariff news, right? Because obviously people felt that China would take the bigger brunt of it since they were the biggest exporter, obviously, potentially in the world. So the market's kind of discounted that. The question is, if we start to find some light at the end of the tariff tunnel, so to speak, when does that dispergence or disparity start to come back in? So I'm going to guess there are people right now that are taking, if you want to take that sort of attitude or outlook, that are doing some sort of pairs type of trade where they're starting to get long some of the ETF, EEMs, and maybe sell an equivalent amount of the U.S. side and saying, listen, I'm not necessarily, they might not both rally from here. I'm just saying that the difference between the two is going to gradually come back to normal levels. So again, that's what I think some people are potentially looking at this point.
Yeah, completely. Alex?
Well, one, I think he makes a really, really good point there. And you're talking about finding value. Emerging markets in a bear market, we're at all-time highs. I really, really like what you're saying there. But you brought the 10-year yield. Okay, well, we're struggling to get past this 3% level because where else are you going to get yield in the world? No other countries have these rates. No one else is offering any yield. That's constantly forcing our yield just to kind of hang out. Well, you also have our Fed raising rates, which in my opinion is more to normalize, to give us some type of a mechanism in case that there is some type of a downturn to lower them back down.
Yeah. I want to give you the final thoughts here, Charles, before we head out. Do you think about inflation in terms of the risk to markets, or do you look at it and say, hey, then things are moving the way we've all been waiting for, good economy, good markets?
Yeah, I mean, I guess for the longer term investor, it has to come into play. I'm a lot more shorter term. You know, the only thing I really recall from this year is the panic that was setting in as the 10-year was rising to the 3% mark. We hit the 3, markets actually sold off, and then what it do, it rebounded back for the next 2 weeks. So,
yeah,
you know, and we're here again, markets shaking it off. You know, the dispersion of focus is really on tariff news, what the POTUS is saying, how it could affect my current trades because people are buying at these levels. So there is a bit of nervousness because, you know, they get long a stock like Netflix, and then the market has a downturn and Netflix doesn't drop, you know, 3 or 4 points, it drops 10, 8 points, and people are freaking out. And in terms of as an investor, I don't see much slowing this market down. Maybe, yeah, as inflation increases at a level that, you know, even the FOMC is unprepared for, I could see that. But outside of, you know, the U.S. dollar getting too expensive, I mean, people are still looking at yield, and they think that even at these all-time highs, there's a lot more to come.
Yeah, yeah, absolutely. It was interesting to see today that kind of the first time we've really kind of seen a reversal of this dispersion between U.S. and the emerging markets. The question, I guess, that's out there, Oliver, is that, you know, is this just a blip, or is this like a point where we're already starting to see, you know, convergence back to a normal level?
Right.
And again, that's the big question. And it looks as though right now the market at least is digesting the fact that and this is what many people thought going into these trade tariffs, is that really all countries want an amenable solution, right? And if that is still the case, and that all sides want to get tariff to a fair level, then potentially this could happen.
One would think, Mr. Connor, one would think, but we'll find
see.
out. Ending on an optimistic note. Scott Connor, host of Virtual Trade, Alex Coffey from the Retail Trading Desk at TD Ameritrade, and Charles Moon, Senior Market Strategist of Equities at Prosper Trading Academy. Guys, really fun and wide-ranging discussion. Thanks to everyone.
Thank you.
All right. Up next, Michael Keeley is going to join us to talk some more charts. Automotive companies, AutoZone earnings.